So we continue with accounting AS,
Case study.
double entry activity 4. It said Akshay has set up his business and is preparing to commence trading in his sports goods store as from 1 April 2019. Before he started to trade, he introduced capital of 30,000. So there's capital of 30,000. So based on the double entry system, we're gonna pay it into his business paid by this was by way of a check paid into the business account on 25th of March 2019. So there's two double entry there. We have the capital account and the bank account. Capital was paid into the bank account, into the business bank account. So we're going to credit the capital account and debit the bank account. Yes.
He paid it by check.
Yeah, that's why it is bank. So we have capital account and bank account. So your capital account, you're going to have on the credit side of your capital account, you're going to have bank as the details for 25th of March. Then the amount will be 30,000. Then immediately you have to open your bank account because for every credit entry there must be a corresponding debit entry. The credit entry here goes to the capital account. Then there's going to be a debit entry in the bank account for the same amount and the same date. So for the bank account, on the debit side of your bank account, you're going to have 25th of March, which the transaction was done. The details will now be capital and the amount is 30,000. So yes, the double entry system is fulfilled.
Perfect.
Is it clear? Then they said the next thing was, this was by Okedon, and they purchased a motor van and paid out 7,400 by check.
March 19.
So there was a motor. Okay, no, before that there was a rent.
No, there was no rent.
Okay, yeah, 7,400 by check. So that's for motor vans. So you're going to open motor van account and bank account. So your motor van account will have 7,400, and your bank account will have 7,400. So the bank account will have a credit entry, and the motor van account will have a debit entry. I think that's it. That point is clear.
And 7,500 as an asset.
7,400. No, we have two things here.
As 7,000. It's written detail as an asset.
Yeah.
Yeah.
Motor van is an asset, so we have 7,400 on the debit side of your motor van account, and on the credit side of your bank account, you're going to have motor van as the details for the same amount. Clear? Is it clear, please?
Yes. And then you have something called.
Then we have.
So you forgot.
And in addition, he paid for shop fitting 2,900. So based on the bank account, so we have in our bank account, there's shop fittings account. This is the shop fitting account. We have on the debit side bank. Then the bank account, you're going to have a credit entry for shop fitting for the same amount, 2,900. Is that clear?
Yes. So for shoplifting, you debit and then you credit.
Shop fitting.
Yes.
You debit shop fitting account, you credit bank account.
You credit bank account.
Clear? Is it clear, please?
Yes.
Then we continue with the transaction.
Purchase.
In addition, you pay, purchase is 7,100. So there's purchases account. So we have purchases account for 7,100 bank. So you debit purchases account and you credit bank account for purchases of 7,100.
Okay.
Clear?
You put 7,100 in debit side
of the purchases account.
Purchase.
The details will be bank.
Bank. But why did you put 7,100? Which one? Is it the expense?
Yeah, from the bank, because you pay through the bank.
It's an expense, 7,100.
Yeah, but you use the bank. You have all the payments on the credit side of your bank account are payments. On the credit side of your bank account are all payments. On the debit side of your bank account are all receivables.
Yes, I know.
Clear, right? So it's an expenses. So done. Then we have
advertisement.
Before that.
Or tennis, LTT.
Before that. He paid, then we talked about purchases done.
Rent.
Half the rent for April for the shop 2,000 was paid. That's we have our rent account. And in your bank account, you're going to have rent for 2,000. I started with rent because it was on the 25th of March. I think you understand. Though the transaction is late, but it was done on the 25th of March. Do you understand?
Yes. Okay. And then again at April 2nd, he paid off.
So your rent account will have a debit entry for 2,000. Your rent account will have a debit entry of 2,000, which is bank, for the 25th of March. And your bank account will have a credit entry for rent on the 25th of March for 2,000. I think that point is clear.
Yes.
Great. We move on. All these payments were made by check, done. So we have a purchase on credit goods for resale from Tennis Limited to the value of 3,400. So our purchases account will also have Tennis Limited. For our purchases account, we purchase goods from Tennis account. So you're going to debit the purchases account and credit T Tennis account. You debit the receiver, you credit the giver. Who is the giver here? Tennis Limited. Do you get it?
I want to ask you a question.
Okay.
You said that they credited.
Look at the question.
Yes, sir.
He purchased. Read the question. He purchased on credit.
Credit.
When you purchase on credit means you buy without paying.
Okay. Is liability credit?
You have a credit supplier,
Okay. Wait 1 second.
which is trade payables.
Yes, but is liability credit?
Yeah.
Liability is credit.
Yes.
Liability is in the credit side, not in the debit side. So why did you write?
It is. It's on the credit.
No, you wrote it here in the debit side.
Look at T10's account.
It's a liability. Liability is credit.
Yeah, T10's account.
You wrote it 2 times.
T10's limited account. This is our supplier.
And you wrote it in purchases.
If for purchases you received, you debit the receiver, you credit the giver.
You did not.
Listen, don't get it twisted. Listen to me.
You did not write in the bank, or you wrote it as a purchase.
It can be in the bank.
Yeah, because it's purchased.
It's purchases on credit. If it was purchases by cash, look at the first transaction for purchases. Look at the first transaction for purchases.
Okay. 7,100.
Yeah, that was bank. So it is in bank account and purchases account. But here, tennis, we bought on credit from tennis.
Yes.
Is it clear now?
Yes. Okay.
Okay, done. So that's about that. Then purchases account is done. Yeah, it's okay. Purchase account is done. I think you get that, right? Now, Asclet business transaction for the first week into April 2019 as follows. 1st of April, paid 150 by check to the local newspaper for an advertisement. So we're going to have advertisement account. This is your advertisement account.
When April 19.
Yeah,
April.
on the 1st of April 2019.
Oh,
for
1st of
bank.
April.
So you're going to have advertisement account, which is going to have a debit balance bank, and your bank account, you're going to have advertisement for 150 on the credit side.
Perfect. We know that advertisement is an expense.
It's an
That's why
expense.
debit.
So you pay through the bank, you have it there. Is it clear?
Yes, it is there.
Done.
Perfect.
Then we have on the 2nd of April, paid 2,000 for the balance of rent due by check. So we have our rent account. The final payment for rent was done. So your rent account, you have your rent account
you read
for
the WhatsApp.
2,000.
Yeah, you
This
wrote
is-
2 times.
Yes.
March 19 and April. No, March what? March what you wrote? March
25th and 2nd of April. Second
Second.
payment was done 2nd of April,
So
2000.
for rent, it's double payments.
The first payment on the 25th, the second payment on the 19th.
The payment that was in the 25th, it was for April.
At the opening, yeah.
Yes, opening of April. But Mister, why in the bank you did not write 4,000 like a whole
You
together?
can't write 4,000 because they are separate transactions. They were done different
Ah.
time.
Travel just okay.
They are done different time. You can't.
So I cannot do that.
Yes.
And I see in bank you wrote date by step by step by step.
Yes.
I cannot mix up the
You
dates.
cannot
on
miss
the
out the dates. That's why I rearranged them.
We arrange them, okay. And another question. For the why did you total up everything in the bank?
Yeah, we need to know our balance in the bank account and our balance in the cash account.
And the balance in the purchased accounts.
Yes, because we're told to find the balance in the cash account and the balance in the bank account.
Okay. But in the bank account you found it 30,600
Yes.
beside the purchase, the credit.
Yes.
So he spent more than how much he has in capital.
The bank, the total in the bank account is 30,600 because there was cash invested into the business and there was additional cash of 600 which was from the bank account to the cash account.
Where was that? Where was that?
Paid
April
600
7th,
cash into the bank.
cash into the bank.
Yes.
But can I count that as revenue?
It's a well, it's not a revenue. It's a part of the money that goes to the bank. It's a debit.
Debit. Okay. And Mister, the purchase, the debt for the
I've not
tenant.
explained this thing. I have to explain all these things,
Explain them. Ask questions. About it.
please. So we continue with please. The 3rd of April, sold goods for cash, $150. 150. You sold goods for cash. So you're gonna have your cash account now and sales account. What do I call it? Cash account and sales account. Your sales account is the same as revenue account. Are you with me? It's either revenue account or sales account. They are the same.
Okay.
Okay. So on the 3rd of April, we sold. For every sales you make, they're going to be because we are giving out, right?
Yes.
For cash, they are all going to be on the credit side.
Okay.
All cash sales will be on the credit side of revenue account, and all purchases will be on the debit
The
side.
side of the account. Yes.
You get it? So 3rd of April was done for 150. Then 4th of April, cash was sold goods for cash for 210. 5th of April, 80. 6th of April, 155, and 6th of April again. Then the 7th of April, 197. All these are the transactions done with cash.
Okay.
Sold goods, we sold and we received cash. If we sell on credit, we would have had, on this side, we have the names of the credit customers instead of cash.
Okay.
It's still going to be under your revenue account, but instead of writing cash or bank, if we had received check, we would write bank under the details.
Okay.
And if it was a credit customer we sell to, we write different names of the credit customers instead of cash. Do you understand up to here? So then our cash accounts, that was revenue account. Then we need to have a cash account for all these transactions because all these transactions are credit entry.
Okay.
They have to be debited. So our cash account we receive cash when we sold, right? So why did we receive the cash? We received the cash because we made sales. Yes or no? So all our cash account will have sales for the same transaction. For all this credit entry, there must be a corresponding debit entry.
Okay.
Is that clear? Is it clear, please?
Yes.
Then on 6th of April, then we purchase additional, which we talked about, for 1,500 in the purchases account for tea tennis. On 6th of April, are you there?
Yes.
We purchase additional goods from Tennis Limited on credit, 1,500. So we purchase account will have another 1,500, and tea tennis account will have 1,500 on the credit side. For tea tennis account, both transactions will be on the credit side of tea tennis account, and they will be on the debit side of purchases account. Do you get it or not, please? Do you get it or not? Okay. So these are the transactions for tea tennis.
Yeah.
So that's about that. Then we have wages was paid for 120 by cash. So our cash account again, go back to our cash account. This is our cash account. Please look at it. Look at it, please. Our cash account, we have wages.
Yes.
We have wages which was paid in our cash account on the credit side.
Yes.
For 120. Then the bank, we talked about it. We paid 600 cash into bank. So the cash account has paid bank 600. I think that is clear.
So you credited it.
In our cash account.
You credited.
Yes.
And cash, what did you refer to it for putting it in the credit?
In the bank account.
Is it revenue?
In the bank account.
No, is it revenue?
Say cash. Cash is cash.
Wait a second. You put in the credit for what reason? A capital?
No, because
or revenue? Which one you put it for inside? Why?
It's going to be an asset.
An asset it's debit.
But this asset was given out.
Given out.
So that's why it's a credit entry.
Credit entry.
Paid cash into bank. Paid cash into bank. So the cash account, the cash is an asset, but now it has paid into the bank account. So your asset of cash has reduced and your asset of bank has increased. And to reduce an asset, you have to credit entry. Remember where we started? To reduce an asset, you have to credit. To increase an asset, you have to debit. So the asset of cash has reduced and the asset of bank has increased. That is why you have it here. Do you understand?
Yes.
So for this debt credit entry, when you look at your bank account, there's a corresponding credit entry of 600 cash. Look at it, please. So your cash in the under the bank, you have cash, and under here you have bank.
Yes.
Cash paid to the bank.
Yes.
Cash gave to the bank. Bank received cash. So your bank account will be debited, your cash account will be credited. Both of them are assets, but asset has reduced in terms of cash, asset has increased in terms of bank.
Okay.
Is it clear now? Any question about it? Any question?
No.
So in the cost of calculating it, our balance it's balanced. So we have our balance brought down to 9,050 for the bank, and that's it. Is it clear?
And you said you were saying that an amount of £70 remains in cash.
Yes, we have it.
From where you got it?
That's the balance. When you calculate this minus this, your debit side minus your credit side must give you $70.
Okay.
The difference, yes.
How much was the total of this together?
This is 790.
790 this?
790. This is 790. 790 minus 820 is 70. Do you get it? All the entries here, the total of all the entries here are 790.
Yes.
Minus 600, minus 120, it remains 70. With 70 then we are balanced. Is it clear? So that ends activity 4.
Okay. We're not doing no activities. Let me tell you.